Stop. Before you buy your first cryptocurrency, ask yourself this. Are you ready for the most volatile, high-stakes financial market in the world? Over 70% of new investors lose money within their first year, and many quit altogether. But here's the secret. It's not about luck, it's about strategy. Stick with me to the end of this video, because today, I'm sharing 7 powerful tips that can save you from the mistakes most beginners make and set you up to win in the world of crypto. And trust me, tip number 7 could completely change your approach to investing. Imagine this, you just bought your first crypto. Your phone is buzzing with price updates and your portfolio is up 10% overnight. You're already dreaming about quitting your job and living off crypto profits. But then the market dips hard. That 10% gain is now a 30% loss. Panic sets in. Should you sell? Hold? Buy more? This is where most new investors fail. They jump into the crypto world without a plan and let their emotions take control. But here's the thing. The crypto market isn't designed for the faint of heart. It's volatile, unpredictable, and let's face it, ruthless. If you don't have a strategy, it will chew you up and spit you out. That's why today, we're going beyond the basics to give you proven, practical tips that will help you survive and thrive in the world of crypto investing. Stick around to the end, because I'll share a bonus mindset hack that separates successful investors from everyone else. Tip 1. Start small, think long-term. Let's kick things off with one of the most important tips for beginners. Start small and think long-term. Here's why. Crypto is a high-risk, high-reward game. The potential for gains is massive, but so is the potential for loss. Jumping in with all your savings because you've heard stories of people turning $1,000 into $1 million is a recipe for disaster. The truth is, most of those stories are the exception, not the rule. Instead, start with an amount you're comfortable losing. Think of it as a learning fee. Even 50 or hundreds is enough to get started. Focus on learning how the market moves, understanding how different coins work, and building confidence in your decisions. And here's the key. Think long-term. Don't get caught up in day-to-day price swings. Remember, people who held Bitcoin through its crazy ups and downs over the last decade are now millionaires. Time in the market beats timing the market. Tip 2. Master the art of DYOR. Do your own research. Next up, do your own research, or DYOR for short. This is where most beginners fail. They hear about a hot new coin from a friend or see someone hyping it up on Twitter and think, "This is it, I'm buying." But here's the problem. Most of those coins are either scams or hype-driven pumps that will crash the moment you invest. So how do you research effectively? Start by asking these questions. What problem does this coin solve? Does it have real-world use cases? Who's behind the project? Are the developers experienced and credible? Does the coin have partnerships with major companies or adoption by a growing community? Read the white paper, check the coin's roadmap, and see if it aligns with its promises. And most importantly, look out for red flags, like anonymous teams or vague promises of changing the world. Knowledge is power, and in crypto it can save you from costly mistakes. Tip 3. Diversify your portfolio, but don't go overboard. Diversification is key, but here's a rookie mistake: buying too many coins. Some beginners think owning 30 or 40 different cryptocurrencies will protect them, but in reality, this just creates chaos. The smarter approach is to focus on a balanced portfolio. Stick with the big names like Bitcoin and Ethereum for stability. They're the backbone of the market. Then, allocate a smaller percentage to high-risk, high-reward altcoins. For example, 50% Bitcoin, 30% Ethereum, and 20% spread across 3 to 4 altcoins. This way, you're not putting all your eggs in one basket, but you're also not spreading yourself too thin. Tip 4. Don't fall for FOMO, fear of missing out. Let's talk about FOMO, or fear of missing out. You see a coin that's up 200% and think, "I have to get in now." But here's the harsh reality. By the time you hear about it, you're already late. Most of the gains have already happened, and you're left holding the bag. Instead, train yourself to wait. Every spike is followed by a correction, sometimes a big one. Be patient, do your research, and look for coins that are undervalued rather than overhyped. The best opportunities are the ones you discover before the crowd does. Tip 5. Set clear goals and stick to them. Tip number 5. Set clear goals. Are you in this for quick profits or long-term wealth? Define your strategy up front. For example, decide to take 50% profits when a coin doubles and let the rest ride. Without a plan, you're likely to panic during dips or get greedy during spikes. Discipline is the difference between winning and losing in crypto. Tip 6. Secure your investments. Security is non-negotiable. Over $3 billion was stolen in crypto hacks last year. If you're storing your coins on an exchange, you're taking a huge risk. Use a hardware wallet like Ledger or Trezor for long-term storage, and always enable two-factor authentication on your accounts. A few minutes spent securing your investments can save you from losing it all. Tip 7. Embrace volatility and stay patient. Finally, embrace volatility and stay patient. Crypto isn't for the faint of heart. Prices can drop 30% in a day and rise 50% the next. Don't let these swings scare you. Zoom out and focus on the big picture. The long-term trend for crypto has always been upward. Those who stay patient and hold through the chaos are the ones who come out on top. Now you have the tools to succeed in crypto investing. But remember, knowing isn't enough. You need to take action. Start small, do your research, diversify, and stay disciplined. Want more tips like these? Subscribe to the channel, hit the notification bell, and check out my playlist on crypto investing. And here's your challenge. Comment below with your biggest takeaway from this video. I'd love to hear your thoughts.